saw. Hello, I just saw the thing on someone's status, and I feel I should join the meeting. So I am joining from Abuja.
Okay, hi,
Thank
Abdul.
you.
Yes, thank you, Abdurrahman. It
Thank
looks
you.
like we're having so many first timers today. Who else wants to introduce themselves? We have Steven, Emmanuel, Mayo. What do you want to introduce yourself? I'm just going to call names. So, there's Ayomide, Emmanuel, Oluwateniola. Please introduce yourself. Tell us your name
Hi
and where you're
everyone,
joining us
good
from.
evening.
Good evening.
Hello everyone, good evening. My name is Oluwateniola Alabi and I volunteer with Learn Politics and I'm listening in from Lagos. Thank you.
All right. Thank you, Teniola. Who else would like to introduce themselves? Our speaker is already here, so I don't want to waste so much time. Please introduce yourself. Tamilore, Titi Lope, Rema, kindly introduce yourself. Just tell us your name and where you're joining us from.
Hi, good evening, everyone. My name is
Good
Tamilore,
evening.
product designer, and I'm joining from Lagos. As to
Oh,
why I'm
wow.
here, I was curious about this. I saw it on Kitron's status, and I wanted to learn more about this. So yeah, thank you.
All right. Thank you so much, Tamilore. I like that you even sold yourself. Say you're a product designer. Who knows? Anybody here can need a product designer. Probably they'll find a way to reach out to you. Who else wants to introduce themselves before we
Hello,
go
everyone.
on?
Hello,
Hello.
everyone. My name is Paula. I'm training from Abuja.
Hello, Bola. Thank you. We are so happy to have you here. Looks like we have so many what's it called? First timers joining. That sounds like I'm in a church. We have a number of people joining for the first time, right? And in case I'll just talk a bit about. Okay, Rema, you want to introduce yourself? Please go ahead.
Good evening, everyone. My name is Rema Ume.
Good evening.
I'm from Lagos, joining from Lagos. I'm joining because I also learn about policy, and
Okay.
this class is just like a start. I want to see what is obtainable from this class first.
Oh, okay. Thank you very much, Rema. All right. I'll just talk a bit about what Learn Politics is about and what we do so that you can, learn more and just be on the lookout for us. So we realize that so many people are like aware of the political situation that we have in Nigeria. And people are just like, oh, what's my business with politics? It's too is it bogus now, ambiguous to understand and everything. So we are Learn Politics. We are committed to just building a more politically aware and active citizenry. We want you to have the basic political information that you need to make better political choices. We want more young people because we have more young people. We have a larger number of young people in our population. So it is off that we are not actively involved, to at least vote in the right leaders, to demand for better governance and everything. And so we at Learn Politics, we are here to just ensure that you have the right information when it comes to politics. You're aware of what the government is supposed to do so that you're able to demand and say, oh, you're not doing this well, this is what you guys are supposed to do. That's what we're here for. We'll talk more about it and we'll drop our website link in the chat box so that you can read up about us. Who else wants to introduce themselves before I talk about our speaker and our topic for tonight? And we just get right into it this evening, rather. And we just get right into it. Who else? I think some people just joined. So please introduce yourself. Tell us your name. You can also throw in what you do and tell us where you're joining us from. I'm trying to look for people that have not introduced themselves yet. I think Victory, Steven, um, I don't want to murder anybody's name. So please introduce yourself. I'm waiting. I'm waiting.
Hello, good evening. Good evening, can you hear me?
Yes, please. Good evening.
All right, good evening. My name is Emmanuel. I am joining in from Onitsha. I also work in HR, right? I stumbled on this on the program on Twitter, and I was curious about the topic, and I decided to register, join in, and get a hang of the whole new tax regime and the rest, right? So thank you. I look forward to having an interesting time.
All right. Thank you very much, Emmanuel. Who else wants to what's it called? Introduce themselves and we'll get right into it. I'll take one more person and then we'll just get right into it. Who else? Who else wants to be my lucky person?
Hello, good afternoon.
Hello.
Good afternoon. My
Good
name is
afternoon.
Michael. I am a business analyst and a project manager. I joined in for one of your previous webinars and I had a very interesting conversation there. So that's when I got an email to join this one and I am looking forward to learning something new. Thank you.
All right. Thank you so much, Michael. We're glad that we did a great job the first time and you're here again. And we hope that everybody will just have an amazing time, be able to learn. And of course, this community workshop is in partnership with Polis, right? And we're just glad that we're able to have this because there's just been so much information, both the right ones and the wrong ones on these new tax laws. And even me as a person, I'm just confused because there's just so many information. You don't know which one is the right one to go with. Everybody's just saying what they have to say. And that's why we've organized this so that you have the right information. You know that, okay, this is what the new tax laws are about, and you're better prepared, you're better informed, and you can also go ahead to also correct the misconceptions that people already have about this tax law. You know, when we in a conversation anywhere that you are, you're able to just raise some points and say, oh no, this is what the new tax laws is about and everything. And you know, you're better informed and you're also able to better inform other people. Can we see how like all of this is a ripple effect? I'm also looking forward to learning and be able to also give people the right information. So I'll just go ahead to read the bio of our speaker. She's already here, and then she would have the floor once I'm done. Chimamanda Augustine is a corporate and commercial lawyer focused on finance, tax, and technology driven transactions. She advises startups, investors, and businesses on corporate structuring, tax planning, and regulatory compliance. She leads the finance and economics unit at the Police NG, driving conversations on fiscal policy, governance, and business reforms, and is a member of the Budget Civic Hive Youth Research Network 2025, where she studies Nigeria's cost of living crisis and the impact of economic reforms. She is passionate about simplifying complex legal and financial issues. Chimamanda works at the intersection of law, policy, and business, helping to shape narratives around innovation and growth. So without at least with a bit of celebration, if you have your emojis, I want us to show that we're excited so that you know our speaker can feel welcome. Please show your emojis or type in the chat box how excited you are so that our speaker, you know, she can feel welcome, she can feel encouraged, like, oh my god, I have people here that are ready to listen and learn. I'm not seeing our emojis, I'm not seeing it in the chat box until I see she's not coming up. Please show your emojis, show your excitement in the chat box. I'm waiting. We have like 5 seconds. I'm
The
not seeing anything in my
images.
chat box yet.
We've been posting our images.
Oh, sorry, I can't see from my end. Oh, thank you very much. I can see Tenny's message. All right, thank you, everyone. Chimamanda, you have the floor.
Okay. Hi, everybody. Good evening, good morning, or good afternoon, wherever you're listening from. Thank you so much for the opportunity to get to speak on this very important topic. I have a few, I really just have one comment on the profile that was read by the moderator, is that I think she forgot to mention that I am a Gen Z myself. So everything I will be sharing,
Apologies.
everything I will be sharing here today also affects me. So I'm speaking first as an expert in the area, but also as I would say a beneficiary as well, or really someone who will be impacted by the system. So I'm going to be sharing my slide. Please let me know if you can see my slides.
Yes, we can.
All right. Fantastic. How many minutes do I have? I tend to talk a lot, so I want to ensure that I capture everything within time. Moderator, are you there? Do I have a set time, or do you want me to just free flow and just be talking? Because I will talk. Okay. I don't know, is there an assistant moderator?
So sorry, I was trying to. Sorry, I was trying to unmute. Had been talking. I didn't know that I was still muted. Just continue. I'll draw your attention when you need to stop. Just talk.
When I need to stop, what if I'm just halfway through and I haven't gotten to the GCS part? Okay, let's just jump right into it. I'm going to give myself 45 minutes, and let's see if I can work with that. Okay, so today, really what we're talking about, or what I'm sharing, is a guide to understand the new tax law in Nigeria. And a key part of all I'll be sharing today, I would try to limit what I'll be sharing to make sense for Gen Zs. So if you are Gen Alpha or a millennial or a baby boomer, I think the law still applies to you, but you may miss out on some of the certain nuances, but it still applies to you. And I think this topic is important because the Gen Z, the youths really, are now in some of the key sectors of our economy. They're now working in think tanks and NGOs to shape policy reforms in Nigeria. A good number of them are working and even building companies, businesses. A good number of Gen Z's youths are in the workforce. Some of them are content creators, freelancers, exploring new terrains. So it's important for this demography of people to understand how this law impacts their economy, their economics, and even life as we would know it. Okay, so I will try to be really quick, but this topic is really important, and I want to enjoy everyone to please stay to the very end of today's session because there's a lot that you'll be learning. I have a couple questions I want to ask. Please, by a show of hand, if you're here and you run a business, a company, limited liability company, you own a business, you run a business. Let me just see. Okay, an emoji maybe, or raise your hand. All right, that's fantastic. If you're here and you work a corporate 9 to 5 and you've seen something like a net income or gross income in your pay slip or in your offer letter, show of hands or an emoji, let me just see. Okay, fantastic. If you're here and you are a freelancer, a content creator, or you work for international clients abroad, maybe on Upwork, on Fiverr, on LinkedIn, you're a copywriter, something like that. Let me just see. Okay, great. I can see people responding. Fantastic. So all that we'll be sharing here today will make sense for you. And I also want to say congratulations to you if you fall under any of these categories. Okay. I want to say congratulations to you if you fall under any of this category. You are liable to pay tax in Nigeria. Okay, another set I didn't mention is if you buy, you sell, or you hold crypto, NFT, please. Also, congratulations to you as well. You are liable to pay tax. If you're a landlord, you own shares, congratulations, you're liable to pay tax in Nigeria. So a good number of what I'll share will be broken down into 6 pieces. I'll give you an introduction and a background knowledge of what the new tax law is, how we got to where we are now. I'll tell you what is inside the law, at least the sections that are important to you. I'll tell you the implication of these key highlights, what they mean for you, and then why you should even be concerned about it as a Gen Z. I'll try to clear some misconceptions and misinformation that we have out there, and then I'll give a sort of guideline as to the next steps or key actions for you to take. Then we have our conclusion and then the Q&A session. Hopefully we'll be done in 30-40 minutes. So we're going to speed run. Okay, so introduction and background. Why did Nigeria choose to reform its tax laws? It's very simple, really. Nigeria in the last 2-3 decades has operated under very scattered and outdated tax laws. For taxpayers, be it individuals or businesses, they have had to look at different orders, regulations, different materials, different documents to be able to understand their tax liability, to be able to understand how much I need to pay the government. And it made compliance really difficult. So the system was inconsistent. And because there were lots of documents that provided for tax in Nigeria, there were also a lot of loopholes. There were situations where a taxpayer, that's an individual or a business, would pay the same tax twice. There are also situations where the government did not provide for certain situations. And so where taxpayers were expected to pay tax, they would not pay tax because there was a loophole that existed. So the government was losing money. All of this really made the system difficult to operate, and there was low compliance from taxpayers. So we had 4 main tax laws: Company Income Tax Act, Personal Income Tax Act, the Value Added Tax Act, and the Capital Gains Tax Act. These are the 4 main tax laws that existed in Nigeria and currently still exist. But with all of these problems, the government thought it wise to reform the tax law. And in 2023, they constituted the Presidential Committee on Fiscal Policy and Tax Reforms that was chaired by Professor Taiwo Oyedele, an expert tax professional, together with other people in finance, law, and academia, to reform the laws, to bring all of these multiple tax laws that we have and harmonize it into one consistent document. And all of this process has bettered the new 4 tax laws that we know. They are the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Establishment Act, and the Joint Revenue Board Establishment Act. So these are the 4 key new tax laws that exist in the Nigerian landscape. So I'm going to be explaining in all of these laws the sections that on the surface level should concern you and should make sense for you. We're going to be answering what's really inside these new laws that we've mentioned. So the first, and this is very important, is that the new tax laws have revised the tax rate, that is, determine the tax liability of individuals. So what that means is that in the new law, and this new law is set to start in January of 2026, there is a new schedule to how much tax you can pay. And the implication of that is that if you earn 800,000 naira in a year, that is about 66,667 naira, I believe, in a month, you are not going to pay any tax. Now, for people who are not familiar with the tax system, let me tell you what is currently being used. In Nigeria now, with the Personal Income Tax Act, the tax rate is that if you earn 300 naira a year, you're paying 7% tax. That's the law now as we speak. If you earn 300 naira in a year, and if you do the mathematics, that's probably maybe 20K or something like that. You are going to pay 7% on that tax. But now the new law has changed that threshold, and you only start getting tax after you make your first 800,000. It has also removed the 1% minimum tax that applied in the current system. So currently, even if you don't earn up to 300K, right? If you earn 250 in a year, not a month. If you earn 250, if you earn 20,000, you still have to pay the government 1% tax. Now, this might sound confusing or new to a lot of people, and I want to believe it's because a good number of Nigerians don't even pay tax. So they're not even familiar with what is currently happening. Talk more of what is proposed or what is expected to come. But it's important to note this, right? So what this is looking like is that a lot of middle class individuals, or not really even middle class anymore, because with inflation and everything, but there's a change we're seeing with the people that will now begin to pay tax, and even in the rates that they will pay tax. Another important thing to highlight is that the rule that determines whether you are liable to pay tax or not has been revised. So in the current, when I say current system, I mean right now, because we're still in 2025. So when I say proposed system, I'm talking about the new tax law in 2026. When I say old law, I'm talking about as it is now. When I say new law, I'm talking about January 2026. I don't know if we got that. Okay. So the rule that really determines your tax liability as a resident in Nigeria has been updated. So it says that you'll be considered a resident in Nigeria for tax purposes if, one, you live in Nigeria, you have strong personal or economic ties in Nigeria, or you stay in the country for at least 183 days in a year. Obviously, this was not codified in law. It was in a rule or in a regulation, and it wasn't as expansive as this. So what this means is, even if you're not a Nigerian, even if you are a Ghanaian and you live in Nigeria, or you work in Nigeria, or say you have strong personal and economic ties. A good example would be maybe you have land in Nigeria or you have properties in Nigeria and you rent it out. Something like that can be considered a strong economic tie. You are liable to pay tax, right? That's what the new law says. And another thing is you're liable to pay tax not just on the money you generate in Nigeria, but your worldwide income. So if you live in Nigeria, I'm in Abuja, Nigeria, for instance, and I have a client that pays me from the US, that money I get from my client in the US, I'm liable to pay tax on it. So this is the residency rule that really determines whether you're liable for tax or not. It has been updated, is what I'm essentially just saying. However, if you're non-resident, that is, you don't live in Nigeria, you don't work in Nigeria, you don't have strong ties, things like that, you are in the UK, for instance, but you have business in Nigeria or you earn income from Nigeria, it's just that income you earn from Nigeria that's liable to be taxed. I don't know if that's clear, because I need to speed run. So this is what the table looks like. So the current tax regime is in your first 300,000 naira, you pay 7%. The proposed system is that you become taxable from the first 800,000 naira that you pay. And we can see the threshold as it increases. It looks like a lot of numbers, but then when you actually do the calculation, you see that there's a key difference. There's some change with what your tax rates would look like from 2026. So this is, by the left is the current tax rate, and the right is the new tax rate. And we don't really have the time to go into this, but a good way to determine your taxability, how much you have to pay the Nigerian government, is to go to the pay as you earn calculator that has been provided. This is it. This is how you calculate your personal income tax. At least this is just a guide, right? The full assessment is dependent on you as an individual or as a business. But you can go to this website. I'm going to see if I can copy. So sorry. Okay. I'm going to see if I can copy it later on and then just share on the income messages. But this is the website to go to be able to calculate your new personal income tax rate. What other key changes do we see in the new tax system? Currently, what we have in terms of reliefs are those things that you can remove from your general taxable income, before you then calculate your tax. So under the current system, we have something called the Consolidated Relief Allowance, CRA. And that Consolidated Relief Allowance says, it doesn't really matter how much you earn. If you earn 2 million, you earn 3 million, you earn 7 million, you earn 20 million. Thank you so much. So the link is on the group, it's on the income messages. If you earn 2 million, you earn 5 million, you earn 7 million. The government allows you to remove 200,000 naira from that. And then the remaining money is what will be calculated for tax purposes. That's the current system. Now, that no longer exists. In the proposed system, what the government has given us is what they call the Rent Relief Allowance. And what this means is that if you pay rent, this does not apply to landlords. This does not apply to people that have their own houses. This does not apply to property owners. If you pay rent, you can claim 20% of your annual rent in your total income before that income is taxable. You can claim 20%. However, that 20% is capped at 500,000 naira. So for instance, your rent is 2 million a year. You pay rent of 2 million. 20% of 2 million would be, and mathematics is terrible, but 20% of 2 million would be, does anybody know? What would 20% of 2 million be? That'll be 200,000, is that correct?
That's 400,000. No, 400,000.
Thank you so much. That's fantastic. So you can claim 400,000. If you pay rent of 6 million, for instance, what's 20% of 6 million? What is 20% of 6 million?
1.2
1.2 million naira.
Wait,
you can't claim 1.2 million naira. Yes, thank you so much. You can't claim 1.2 million naira as rent relief. You can only claim 500,000. That's the maximum that you can get. That's what the law says. However, other deductions still exist. So things like when you contribute for pension, you can claim that as a deduction. And when you contribute for health insurance, life insurance, things like that, they remain the same. Essentially, what this means is that if your total income from all your multiple sources of income, the total money that you have at the end of the year is 7 million, and you contribute, say, 200,000 naira for your pension, you contribute 100,000 naira for your health insurance, you contribute 300,000 naira for your life insurance. Out of the 6 million naira that you earn in a year, right, you can take out all of these contributions. These contributions will not be calculated for you when they're trying to calculate your tax. So essentially, those are deductions, right? Then relief would be out of still that 6 million naira that you earn in a year. You can then take out, say, if your rent is now 1 million naira, you can now take out 20% of 1 million naira from that. So essentially, these are the things that you would impute to reduce your tax liability. So you have to know what they are, and the reliefs that apply to you and the deductions that apply to you. They are different for businesses and individuals, so you need to know them. Another key highlight for this new tax laws is that digital assets, virtual assets in sense would be crypto, NFT, trading, are now regarded as taxable income. So if you buy and sell crypto, coins, and things like that, the money gained from that transaction is taxable, and government will require that you declare it and pay subsequent tax on it. Next, for those that have companies, there's a new definition to what in a company in Nigeria is termed. Currently, or like in the old law, a company is regarded, an organization is regarded as a Nigerian company for tax purposes if that company is registered in Nigeria alone. If you're registered in Nigeria, you'll be considered as a Nigerian company and then you'll be taxed as a Nigerian company. Now the law has changed. Not only if you're registered in Nigeria, now if that company, that business is managed and controlled from Nigeria, then you'll be regarded as a Nigerian company. And if you're regarded as a Nigerian company, you will be taxed, that company will be taxed as a Nigerian company. A good example of this would be, I am in Nigeria and I run a company, I run a social media marketing agency, right? It's registered in the US because all of my clients are in the US, a graphic design agency, something. Registered in the US because my clients are in US, but I am the founder and the business is controlled from Nigeria. This law says that that business will be regarded as a Nigerian company and will be taxed as a Nigerian company. Previously, it was just that, oh, you have to be registered as a Nigerian, but now that's no longer the law. There's also a change in there's a reclassification of types of companies, categories of companies, and then the rates that apply to them. The old law says there are 3 classifications of companies: small company, medium company, and large company. However, the new law now says that there are only 2 classifications: a small company and a large company. In other words, a small company and a non-small company, a small company and other companies. That's what the new law says. But beyond that, it also says that the threshold for what is classified as a small company or a large company has now changed. So the old law says a small company is a company whose annual turnover, that's their entire money in the year, is just 25 million. That's what the old law says. The new law now says it's no longer 25 million, it's now 50 million, right? That's the new law. I want to add a caveat here. There has been ongoing conversation in and amongst tax experts, lawyers, accountants, finance persons, as to what the law really says about this classification. Is it really as 50 million or is it as 100 million? Because if some of you maybe have been familiar with this tax conversation and you've probably been watching the news or reading tweets or reading articles about it, and you see different numbers being shared across board. You might say a small company is 50 million, a small company is 100 million. That conversation is ongoing with the members of the committee and even tax experts, because there seems to be some, as the president has said, typographical error when it came to imputing that in the law. So the conversation is still ongoing, right? We're awaiting final clarification from the committee to determine what that small company will be. But currently, what is in the law, that is in the gazetted copy, is 50 million. But there's been other categorization that says 100 million. So it's still an ongoing conversation, but we're trusting that before the implementation date of 2026, that will be classified, that will be clarified. So just note that, right? There are talks as to whether it is really 50 million or 100 million to be classified as a small company. Is that gotten?
Yeah.
Fantastic. Now, after this classification, we're going to look at what the updated tax rate is. So small companies essentially just means that someone says if they're going to have access to the recordings. I believe so. So small companies essentially just, so the tax rate for small companies is at 0%. Small companies don't pay any companies income tax in the new law, right? And that's now looking like it's either going to be companies that make from 50 million or 100 million and above. They'll be classified as small companies and you don't have to pay the government any money at all. Not only do small companies not pay Companies Income Tax Act, they also don't collect and charge VAT. They don't pay development levy. They don't pay capital gains tax. I also think they don't pay maybe withholding tax or something like that. But essentially, they are almost fully exempt from paying tax. Small companies. Large companies, on the other hand, have to pay 30% tax on their profit. I want to clarify two terms here for the people who are not really tax experts. So you need to know two things. When it comes to classification, what the law looks at is turnover. Turnover means how much was the entire money that you own. So like what was your revenue? What was the turnover? What was your revenue? But so after determining your revenue, right? Say your revenue at the end of the year was 200 million. That's all the money you got. That's all the money you received, right? Then from that 200 million as a company, you spent 70 million on expenses, running the business, marketing, paying staff, operations, all of that, to spend 70 million in the whole year. You have 130 million naira left. Out of the 130 million, you used maybe 30 million to repay loan, something like that, right? You have 100 million left. Out of the 100 million, you took maybe another 5 million or something for your, okay, let's say, yeah, so deductions, maybe deductions and reliefs and claims like that and all of that, tax credits and all. So at the end of the day, you'd say that your profit is 95 million. 95 million. The government is going to ask for 30% on that 95 million. The government is not asking for 30% on the 200 million. So two things. When it comes to classification, what classifies you as a small company or a large company is your annual turnover. But what determines what determines your tax rate? That's not the right phrase. But on the amounts that government will actually tax you, it's not on your annual turnover. The government is taxing on your profits. So your annual turnover is 300 million, and then your profit is 95 million. It's at that 95 million that they are taxing you, right? Don't think that because it's 95 million and it is less than the classification for large company, you are a small company, and so you will not pay tax. That's not what the government looks at. So I'm trying to see if I can explain it properly. I hope I am doing so, right? So 300 million high revenue, and then the government says you're a large company. So when you now say, okay, out of the 300 million, it's 95 million that's actually my profit, they will now tax you on that 95 million. I hope that is clear. Okay, and the tax rate is 30%. I shared that already. So this is also a classification of what the current regime looks like and what the new reforms look like. I explained small companies, medium companies, large companies. And yeah, so these are the changes. There are also still so many highlights, but I think I've said this in passing. The threshold has increased for small companies. It's no longer 25 million. It's now a 50 million or maybe even 100 million, pending the classification. Development levy now also exists. And I want to share a point here. So in the old system, what happens with taxation for companies is that companies will be required to, after paying their company's income tax, to then pay different levies. So you see them paying 0.25% to NASENI, to the infrastructure agency, to the education agency. So they are paying different sectoral levies, right? What this new law has done is to bring all of that levy into one thing, which it calls the development levy. And that development levy is at 4% of the company's profit. So the implication of this is that if you're a large company and you're paying 30% company's income tax, you're also paying 4% development levy. So altogether, your total tax liability is 34% on your company's profit. I hope that makes sense. Great. Now, this 4% will then be shared amongst the different agencies. So NASENI, education, security, infrastructure, technology, and things like that. The division is provided in the law, but just know that the government has a responsibility to dispense that money, as they have stated. Other key highlights. So value-added tax, which is the tax that you pay on the usage of certain goods and services, that's value-added tax. So this particular tax, the rate hasn't changed, but some provisions have changed. So it's still at 7.5%, right? But some things have now been reclassified as being exempt from VAT, or to be charged at 0 VAT rate. What this means is that certain basic fundamental items like food, like books, some technological equipment will not be VATable. Let me see if I can explain what that means. So you know how, okay, I don't, yeah, okay, yeah, this is a good example. So you know how sometimes you go to the restaurant, fancy restaurant, to get something to eat, right? And after the bill, when the bill comes to you and you see that your total bill is 30,000 naira, and then you see 7.5% there, that 7.5% there is VAT. And VAT is on those things that government considers luxury items. But for basic things like buying baby products, food, groceries, some sanitary products, things like that, the institution, the entity selling that product or giving that service cannot charge you VAT. So if you see a situation where this item is not supposed to be VATable and the entity, maybe the supermarket or the bookstore, is now adding VAT, or if you're in a transaction with a professional service agency and they're charging you VAT on an item that is not supposed to be VATable, just know this, right? And you can bring their attention to it. So what the government has done is that they've really changed some items that previously were taxed for VAT, and they've now made it exempt from VAT. But the rate still remains the same. So for things that are VATable, 7.5% will still apply. A good rule of thumb to note is to know, is this, yes, you can get a list. Yeah, you can get a list. So a good rule of thumb to know whether this item is VATable or not VATable is to ask yourself, is this a fundamental item, or is this a luxury item? When I spoke earlier, I said, you're going to a high-end restaurant to have dinner, maybe with your bae or your boo or your friends. The government considers it as luxury, so you have to pay 7.5% VAT on it. But things like buying books, you don't pay VAT on it. Okay, capital gains tax. This is the tax that you pay on the gain you make when you sell assets that you own. Assets like land, properties, shares. If I buy a house at 3 million naira in 2001, right, and the worth of the property now in 2025 is 300 million. 3 million at 2000. Sorry, 3 million at 2001, and then 300 million. I'm selling it now at 300 million in 2025. The difference is 277 million. I'm going to have to pay capital gains tax on that 277 million. Well, I mean, not entirely, because there are still deductions that will be made. There's still calculations on that, but then just know that you are liable to pay tax on sales, on things like that. If you buy shares from the Nigerian Stock Exchange, you buy it at 50 naira, and that share increases, the worth is now 200 naira, and then you sell it and you make a gain of 150 naira. You are liable to pay tax on that, capital gains tax. Now the rate on that has increased. Initially it was 10%, it is now 30%. So you need to be aware of your tax liability. Another key highlight of the new reform is that there is going to be a unified tax ID. And this is important because one of the things that the reform is trying to do is to make tax compliance easier for taxpayers. So what this new tax ID is looking to be is you're going to have one serial number that you can use across board, whether paying federal tax or you're paying state tax. you're going to have one tax ID. And I know some of you may have come across the conversation that if you don't have a tax ID from 2026, you'll not be able to open a bank account, or you'll not be able to operate certain things. So I want to clarify that, and I touch on it more as we go forward. That's not what the law says, and that's not really what the agency, the government is really saying. What this new law is saying is that if you don't have a tax ID at all, and then you intend to register either a business or a bank account, you have an NIN, you have a BVN, your business has an RC number, that NIN, BVN, RC number will be automatically linked to a tax ID. So the system will generate a tax ID for you if you don't have one. But if you do have one, the system will link your business ID, your RC number and your BVN, NIN, it will link it to your tax ID. So the government is looking to build a database so that you have just one tax. The same way you have just one NIN for registration purposes, you'd have one tax ID for taxation purposes. That's what this is looking like, a unified tax ID. Like you can use to pay your tax across federal and state level. There are also changes in terms of administration. The Federal Inland Revenue Service will now be the Nigerian Revenue Service. Someone's hand is raised up. I don't know if I can answer questions now. I'll do that later. Please just keep your questions. There's also the Joint Revenue Board will now replace the Joint Tax Board. And it's not just a change of name. What we're going to see is a change of functions. So they're going to have more authority to do things. For instance, the Joint Revenue Board is going to move from just being an advisory body to a supervisory body, working with the federal government and the state government for taxation purposes. Yes, I can see the timer there. I don't know if I can, because we still need room for question. So I don't know. Maybe I'll give the moderators to really tell us the next steps. I still have a bit, like I have a long way to go. So I don't know. Okay, it's for the speaker. Okay, it's not for everybody. Okay, thank you so much. Okay. I had asked earlier what's my time. Now I have to rush, but let's see if I can do this. Okay, so what we're going to be seeing is not just a change of name, but also a change. Oh, no problem. 45 minutes is fine. A change of they're going to be given more authority to carry out all of their responsibilities. There's also the strengthening of the tax appeal tribunal. I won't really go into detail here, but it's good to note that. And a good one, this is really important for us who will be taxpayers or are taxpayers, the tax ombudsman. So the tax ombudsman's responsibility, so this law is creating a new body called the tax ombudsman. So the tax ombudsman responsibility is to handle complaints from taxpayers. The current issue that we have is that taxpayers may not like the way the revenue service, the administrative body, handles their tax, or maybe audits their tax, or penalizes them, or things like that. But then there's no intermediary body for them to complain to, and that's why this tax ombudsman was created. So when it becomes fully functional and operational, you can lay complaints. Say, oh, I was assessed 20 million, and I can promise that it's 2 million. There was an additional error. I don't know where it came from, but I don't have that money and I can't pay that money, or things like that. So the tax ombudsman is going to handle complaints like this for taxpayers, and it's a really great initiative. Okay, so some misconceptions I wanted to clear that I assume some of you may have come across is that I spoke about the first one, that if you don't have a tax ID, you cannot open a bank account. This is not true. You can still open a bank account, but something is going to be working in the background for you. That bank account that you have opened will have a tax ID attached to it. And because you open bank account with your BVN and your NIN, the tax ID number will follow you. So it's best for you to go and register so you are aware of what the tax ID is and you can use it to pay your taxes, file your taxes. And that misconception is that any money that enters into your account will be automatically deducted for tax. This is not true. This is not the way Nigeria's tax system operates. So Nigeria operates a self-assessment system, as most Western countries do. What this means is that the government expects of you to find out your tax liability, declare your assets, and then pay the taxes attached to them accordingly. That's what the government expects of you. So you are responsible for filing your own tax. The government is not going to come and say, oh, Mr. Samuel, I know that you work here and I know that you earn money here, so you're supposed to pay us this amount of tax. The government doesn't assess your income for you. It expects of you to do the assessment yourself and then file your taxes. However, the government can audit. So because a lot of what this new reform is looking to do is to leverage technology, government will have access to high-level transactions. So if you are moving money across your bank, not just your bank, but like the BVN attached to all of your accounts, it's not just one bank. The BVN, that's what the government looks at, attached to your bank. There's a threshold that is set. The government will pay attention to every month. They will then check that using your tax ID now, whether you are paying your taxes or not. And if you're not paying your taxes, you will be audited. The audits might not happen immediately, might not happen in the first month, might not happen in the second month, it might take even 5 years, but you will be liable when the government eventually decides to audit you. What this could look like, and I'm going to talk about the penalties later on. What this could look like is, because now the penalties are stricter. What this could look like is you're supposed to pay, say, your total tax is maybe 20,000 naira per month, or let's say 2 million naira in a year, depending on whether you're a business or an individual. And then you don't pay that. The penalties, I think, as high as 50,000 naira per month. In the first month, as high as 50,000 naira, and then subsequent months, 25,000 naira. So the penalties are really, really strict. So if you don't pay tax and you're evading tax now, when the government decides to audit your accounts, whether as an individual or as a business, and they see that you're liable, the cost for default is really, really high. And I'm stressing that because I know a lot of Nigerians think that, oh, it's not, how would they know? How many Nigerians are we? How would they know? And I think also this particular provision is also negatively affects people that and not companies, because as a business, your business is not seen as a separate legal entity under the law. Your business is seen as you. So where government then audits your business and say that 5 years and includes all the relevant penalties, and you're now seeing that you have to pay tax plus penalties of up to 5 million, 10 million, 50 million, 100 million. The government can lay claim to some of your assets to be able to redeem or clear up those defaults. So they can say, oh, you have a house there, we're going to take it. You have a car, you have a property, things like that, to be able to clear the debts that you owe. Let me call it that. It's actually sad, my dear. Yes, I know. Okay, another misconception is that if you're under 18, you will not pay tax. The law doesn't say this. The law says if you earn, as long as you make money, you owe a percentage to the government. So what does all of this mean for you, and why should you as a Gen Z even care about this conversation that we're having? The first is that if you are a corporate 9-to-5, you're a salaried worker, your annual pay, if your annual pay is 1 million, you now pay less tax, right? It's around 15% as compared to the old system, which is 22%. So there's a reduction there, but it also means that the higher you earn, the higher you pay, because Nigeria operates a progressive tax system. For you as a free make money from Fiverr, from remote work, you need to declare it because the government sees that as taxable income. But you can also deduct expenses from it. So you use your phone or you buy camera to improve your content creation side hustle, or you do ChatGPT subscriptions or Canva subscriptions, CapCut subscriptions, things like that. You can claim them as deductions. You pay for Wi-Fi, you got Starlink. So what do I mean by when I say you need to declare it? You need to file your taxes, right? You need to file your taxes, and you file your taxes annually. You need to file your taxes. So every year you'd say, in the year 2025/2026, this is how much I made. These are the expenses, and this is how much I'm liable to pay, and this is the payment so far. So that's what I mean by you need to declare it. You need to pay taxes. You need to explain your source of income and then explain the tax rates attached to it and make payments accordingly. For small businesses, you owe no company tax, but you still need to declare this. Sorry, I'm getting a message. Okay. So for small businesses, even though I explained earlier that you don't pay any company's tax, you cannot assume that. Please, can we just keep the questions till to the end? Okay. Even if you, as a small business, even if you're regarded as a small business and you pay no company tax, no corporate income tax, you still need to file your returns with the government to specify this provision that, listen, I'm a small business, so I don't have to pay tax, but this is all of my records to show that I'm in fact a small business, right? So you don't just say and assume that, oh, I'm a small business, so I don't pay tax. You need to show the government that you are indeed a small business. You need to declare that you are indeed a small business, and so for that reason, you're not going to pay tax. For everyday Nigerians, changes in VAT would affect you both negatively and positively. Changes in, because okay, there's also a conversation on this fuel levy. That's a surcharge, 5% surcharge on this. It also affects you. If you do a lot of imports and exports, the tax rates affects you, and so you would see changes in. So prices could go. So you could see changes in price from little things like how much Uber cost to even buying ice cream from Cold Stone or pizza from Domino's. So it's important for you to understand the implication of all of this, and then now it will help you to understand why you should care even as a Gen Z. The reality is that you cannot escape tax. You can't say, I'm going to lay low. I'm not going to post on social media. Nobody will know that I have money. You have to pay taxes. You don't, you face penalties. And now the penalties are so strict. So I think the best advice, and really this is what I say to clients, is really understand your tax liability and then work with a professional to reduce that tax liability. But you saying, I'm not going to pay tax at all, it will come to bite you at the end of the day. Maybe not now, but like in 5 years' time, and it's worse. So let's even assume that you're not a business, you're an individual, and you want to go abroad for your master's, and they can see from your financial records that you've been making a lot of money. They'd ask for your tax clearance certificate. Have you been paying your taxes? And if you cannot show that you are a legally compliant, a tax compliant citizen, visa could be denied. Then the government will begin to audit you and require that you clear all of your debts before you even be considered to leave the country. You almost be treated like a fugitive. Okay, that's one, you can't escape tax. Second is that understanding your tax liability helps you to determine how you price your goods and services. So if previously you used to charge, as a freelancer, you used to charge maybe 150,000 naira for a Reels video, Now, when you realize that you have to pay tax, you cannot be charging 100 and 170, 180, 200,000 naira. If you were selling your product at 15 naira, now you can put it at 16 naira, at 17 naira. So understanding your tax liability helps you to properly price your products and then negotiate your pay for those who are gross. Your gross income is 200,000 naira, and then when you do the calculation, you are seeing that after tax is going to be 120,000 naira. You'd negotiate better and you say, no, let's make the gross income at 250,000 naira, right? And it also help you to know what reliefs you can claim and reduce your tax liability. It's really important. Another reason why this conversation is happening is that tax are expected, or it is in fact, tax do fund public services. So the money that we give to the government is not for to fly abroad and, you know, squander, even though they do that. We can now, because the system is now strict and we have to be compliant, I think it makes it necessary for us as citizens to demand accountability and transparency from the government. And I want to speak on this a little bit because some people don't understand just how much what the dichotomy is between the federal government and the state government. A lot of the taxes that we actually pay goes to the state government and not the federal government, as we assume. Some people always think, oh, who's calling me? So sorry about that. Personal, can I be heard? I keep getting a call and it's interrupting. Okay, thank you. So people assume that the tax that we pay goes to the federal government. A good majority of the tax that we pay, especially the personal income tax, right? The one that we pay as individuals, that goes to the state government. So I think it's important for us to know this so that when we're demanding transparency and demanding accountability, we're channeling it to the right sources. We're asking our state governor, there are 70 million people in this state alone, and at least 50% of them pay taxes. What are you doing with our money? The roads are not any better. The schools, the children have been out of school for months now. What are you doing with our money? So I think a lot of people assume that the federal government is the one that receives a good number of the tax, whereas they really account for a few of the tax that we pay. The federal government collects tax from Abuja, people that stay in FCT in Abuja, citizens, and maybe military workers, but then other individuals, and then companies pay to the federal government, but then other individuals, personal tax goes to the state government. So it's important for us to know that so we can really channel and demand accountability and transparency better. Okay, so what are the penalties for non-compliance? I said this briefly, but let me just run through again. If you don't file your return, it can cost you as high as 100,000 naira in a month. If you earn income and you don't register for tax, your penalty be as high as 50,000 naira in the first month, and then every month you're liable to pay 25,000 naira. This is not 25, this is not 250 naira, 25,000 naira. So imagine in 1 year, if you've defaulted, how much money that you owe. If you enter into business or you give a contract to someone who is not validly registered and you don't have a tax ID, it can trigger a fine of up to 5 million naira on you, the person that gave that contract. So you need to be. Vivian is always sending crying emoji. So you need to be alert as a business owner in your transactions, in your partnerships. For creators, for freelancers, people that work in the crypto space, there are specific rules now, and these rules will even be expanded upon for you to comply with tax. And if you don't do that, And this one, I'm speaking particularly to people who the law calls virtual asset service providers. These are people that have their own peer-to-peer crypto, maybe app or technology. So if you are regarded as a virtual service provider and you don't comply with taxation, you can pay a fine of up to 10 million naira. So again, the rules are really strict. Okay. So what are the key steps? What are the next steps and what are the key actions for you to take? The first is to get your tax ID. If you don't have it already, and if you do have it, you need to re-verify. You need to verify that you need to activate it. You need to check whether you have a tax ID or not. If you don't, you need to register. You need to verify that it's active. After doing that, you need to organize your records. If you want your business to continue as a business name, as an enterprise, or you want your business to go from a business name to a company, you need to understand what the implication of that is for you, right? And then keep receipts of transactions because you need to declare at the end of the year. Keep proper record. So you can claim your reliefs and your deductions and things like that, invoices, proof of payment. Keep proper record. Don't just discard them. If as a business you purchase items, equipment for usage in your company, always keep the receipts because you would use that to claim expenses. You might even use that to, that's if you're a large company now, to claim VAT credits. This is important for creators and influencers, people in the social media space, graphic designers, people that earn from abroad. What the law requires of you now is to treat your side hustle as a small business because you need to account for it. So don't just say, oh, I do graphic design on the side. If you make money from it, you have to declare that. So keep your records. If you subscribe to Canva, ChatGPT, CapCut, things like that, keep records because you will use that to claim expenses. Then know your tax liability, know your brackets, know your reliefs, right? And then know what counts for you as deductible. Track them. You will need all of this when you are declaring your assets and filing for tax. Also, now after all of this, ensure that you file your annual returns and stick to the deadline. I think the deadline is March 31st every year. So you have to ensure that you stick to that deadline. I think there's an extension till June 30th, but it comes at a penalty. So stick to the deadline as well. Always stay compliant. Now, we're also seeing a possibility of the government working with a lot of technological innovations, going digital. Some filings will be done online and things like that. Get familiar with these tools and these mobile apps as they come up. Learn and engage, continue learning, work with experts to, especially if you're working on a large scale, right? To determine your company or or the individual's tax liability. And yeah, that's about it. That's about it. Thank you all so much. Do we have any questions? Okay, I'm gonna stop sharing my screen now.
Okay. Thank you so much, Chimamanda. So I can see that some people's hands are already raised. Looks like we have some people have some questions. Temitope raised his hands first, so you have the floor. Kindly ask your question.
Right.
Can anyone hear me?
Yes, we can hear you. Faith. Can I go ahead to ask now?
Yes, please go ahead.
Yes,
Ask your
go on.
question.
Right. Good evening, Chimamanda, and thank you very much for this session. However, I have two questions, right? Especially when you spoke about digital assets, that's the government taxing digital assets, right? So let's imagine a scenario here. I'm a 9 to 5 individual. I work in corporate. At the end of the month, before I get my salary, HR has already deducted my tax out of my gross income, right? Now, after receiving my net income, I use out of that income to to buy a digital asset, for example, right? And let us say I bought that digital asset at 10,000 naira, and then at the end of the year, the value of that digital asset is 100,000 naira, just for example. Will I still pay taxes on that? That's question number one. Number two, I'm also a 9 to 5 worker, right? But then I also on the side, I have what do they call it, a consulting business, for example. But then our total revenue at the end of the year is less than 50 million. And do I still pay taxes from my small business even after paying taxes from my corporate job? That's my question.
Okay, so for your first question, yes, you'll be expected to pay tax. So pay as you earn is a mechanism that government have devised for people that work in the corporate space to be able to ensure that they are compliant with their tax, right? So the responsibility is on your employer to collect a percentage of your tax and pay to the government. After they do that, they're supposed to give you a slip, a certificate, something to show that they have complied with that provision. That document is what you will use when you are filing, because you have to self-assess when you are filing your own taxes at the end of the year to say, my employer has paid so and so amount on my 9 to 5 income. However, I got income from other places, because the government doesn't just take one source of income and leaves it at that. They look at all the areas, right, for taxable income. So a good example would be, first, your corporate 9 to 5 job, assets that you own, right, crypto, shares. If you sell those assets, especially if you sell those assets, if you rent, if you have an apartment and you're collecting rent on it, that income is taxable. If you receive estates, say maybe, we're calling estates really, grants, prizes, income, they would consider as, not gifts though, but certain grants are considered as taxable. Honorariums are considered as taxable income. What else have I not mentioned? There's a long list really, but I'm saying all this to say that it's not just your corporate 9 to 5 salary that the government looks at. They look at other sources of income, right? So even if your employer has paid, you are still expected to assess yourself and see if you have other sources of income, and then pay taxes that attach to it accordingly. Now, on your second question as to where you have a small business on the side and that business is considered, someone, Abigail is crying, yes, honorarium. You have a business on the side and that business is considered a small company, you don't pay taxes on it. But if it is a large company, right, you pay taxes on it. I want to, and this question is important because I want to clarify something here. I see in conversations with clients, I see that they miss this up sometimes. So for companies, they're registered under CAC as a company, maybe a private limited company, public limited company, whatever the case may be, it's registered as a company, right? If it's a large company, you pay taxes 30%. If it's a small company, you don't pay corporate income tax at all. But if you do not register that business as a company, it is treated as personal income. So that schedule I shared earlier, as after your first 800,000 naira, the next 2.2 million naira will be taxed at 15%. That revenue from your small business will be taxed using that schedule. It's not treated as a company. It will only be treated as a company if it is registered under CAC as a company. But if it's not, if it's registered as a business name, an enterprise, you will pay tax. The government sees it as that business is you. So you're paying tax using that personal income tax rate. I don't know if I am able to explain that well for you.
I guess it. Thank you.
Thank you. Next question, please.
Thank you so much, Mamanda. Michael, you have the floor, please.
Okay. Thank you, Chimamanda. You've shared a lot of useful information so far. I have 4 questions, however. 1, why you mentioned that your personal tax ID will be linked to your company registration number, your RC numbers, that you that you have shares in, perhaps, or like you're associated with, right? Like if it's your own business that you register. So what I'm asking is, why would your personal ID be linked to your RC number if you are using your company income tax ID, your company's team tax ID to pay its own taxes? You understand?
Okay,
This is
so
for like, okay.
okay, let me clarify that. I don't think that's what I said. So what I said earlier was, if you register a company, right?
Mm-hmm.
A tax ID will be assigned to that company's RC number. If you register a business, right? That business, because the government sees it as still you, it will be linked to your tax ID number if you have one. If you don't have one, one will be created for you for it. Did I clarify that properly? So as a company, it has its own tax ID number. But if it's a business, right, the tax ID will be your tax ID that will be linked to it.
Okay.
And if you don't have
Okay.
a tax ID, one will be created for you and the business.
Okay, so only an RC can get a company, a company team.
Yes, if it's a company, it's going to have its own tax ID. It's a separate legal entity.
But if it's a BN, it will be your personal tax ID associated, right?
Yes, personal. Yes.
Okay. Okay, so when do we pay state taxes and when do we pay government taxes?
So government tax is a good example would be corporate income tax. So you pay to the government, FIRS. State taxes, on the other hand, you have to pay to your state's revenue service. A lot of states have digitized this process. So if you go online, you can see fctirs.com, lagosirs.com, and then you follow their online instructions, and then you declare your tax and you pay accordingly. So that's really how the process works. What the government is really looking to do now is just to harmonize your tax identification number, such that if you move states, you leave Abuja and you start living in Adamawa, for instance, you can still use that same tax ID to file your taxes in Adamawa.
Okay, that makes sense. Okay. Thirdly, so I'll go through. If I have never paid my tax before and I just got my tax ID, my personal tax ID last month, how do I know what I'm owing the government? Does it start counting from when I get my tax ID, or is there a range or backlog that the government will be looking at?
It actually starts counting from when you are liable to pay tax. However, there's a mechanism to not like there's a mechanism, but like sometimes there are situations where the government will, to encourage people to start paying their tax, they could waive all of that, right? I don't know of any that is currently happening, but you are required, you become liable to pay tax, and the penalties will start counting from the very first day that you started earning and you did not pay tax. But I think there might be, yeah, so if you decide to get your tax ID now and like start paying tax, it's very possible that if you've been earning money for the last 5 years, you might, and I say might, you might be required to handle the penalty. But then again, the revenue service is at liberty. They have the discretion.
Hello?
Things like that, just to encourage compliance, but it's not a guarantee, right? It's not a guarantee.
Okay, so I'll just have to check with the person filing my tax to confirm.
Are we here? Can we hear me?
Yes, can you hear me? Can you hear me?
Hello?
Can you hear me?
Can we hear me? Are we here?
Amanda, I can hear you. Can you hear me? Yes, I can hear you.
Yes, I can hear you. Okay, great.
Can you hear me now?
Yes, I can. Please go on.
Sorry, my final question. In assessing my personal income tax liability, how would I determine, or how does the government determine which are my earnings, which is like, say, a cash gift that someone gave me, or maybe loose cash that's from my previous tax payments, the remaining funds that is my personal cash to use, right? If I'm transferring it to another account or sending it to someone else, would that
I
be
don't get that
taxed as
question.
well?
Say that again.
How does the government categorize which is an earning or like a gift or like a loose cash that is being circulated from my personal income?
Okay, so um when it comes to assessment, the government expects that you make all of those calculations yourself, right? Where this conversation really come into play is when they have reason to believe that you're not truthful with your assessment and they're auditing you. That's when they become particular and you have to defend every transaction. So if you say, oh, this is loose cash, I just moved it from my OPay to my PAMPay, you have to, like, it has to tally. You left your OPay at 1705, it's now at your PAMPay at 1706, so it has to tally. But all of those nitty-gritties really just come into play when they're auditing. But they just expect that you know best how your money moves, right? What your expenses are and what your income are, and then they expect you to declare and then pay the tax on that. But then again, if they have reason to believe that you're not truthful and they decide to audit you, that is when you would require to explain every little detail. And if you fail to do so, they would consider it as taxable income, and then you have to pay tax on that. So this is important that you mentioned this, because it then behoves on us as individuals to ensure that we keep accurate records and organize your finances, right? Don't just move money around. Say your Access Bank is just for income. That's where all of your clients pay money to. That's where you receive your rent if you own property. That's where you collect your salary, right? And then you now move maybe 30% to your PAMPay for petty transactions here and there for expenses. You don't mix your personal bank account with your corporate bank account. And even if you have to do it, you reconcile the accounts properly. So it really calls on businesses and even individuals to keep their records straight, be able to trail where your money is coming from and where your money is going, because at some point you will have to defend it.
Okay, thank you very much. Finally, how do we connect with you after this call? Like your email or something?
Okay, so I think I can drop it in the in-call message.
Thank you very much. Awesome.
All right, thank you. Before I go on to the next person to ask their questions, please, we drop the link in the chat box. Kindly feel to give us your feedback so that we can improve, in case you have any suggestions for us, we can improve, and for the next month we'll be able to have a better workshop for you. Please and please kindly help us fill the feedback form. It takes less than 5 minutes, like in 2-3 minutes you're already done. The link has been posted again. Just click on it, give us your honest feedback, and we'll definitely work with it. Thank you very much. All right, so the next person is Chidema. Chidema, please, you have about 40 seconds to ask your questions. Thank you. Chidema, can you hear me?
Okay. Yeah, I can hear you. Thank you.
All right.
Good evening. Thank you so much, Amanda. So for the first question I have, okay, for instance, someone is not working at all. Maybe a grandmother now, she's not working, but she's receiving money from
I don't think I
her
can hear you. Am I the only
children.
person that cannot hear her?
Okay, can you hear me, please? Can you hear me?
Chidema, your voice is quite low. Okay, I can hear you now.
Okay, I will try to raise my voice. All right. So, for instance, a grandmother that's not working, she's receiving money from her children, maybe not even one person, maybe like 5 different persons. And while receiving that money, she's receiving more than this 800,000 per year. Is she liable to pay tax? Because she's not working, but she's still receiving money from her different children from wherever they are paying the money into account from. That's my
No,
first question.
Let me answer that quickly. No. So it is regarded as a gift, and so it's not taxable income. Where it will become taxable income is where she takes, say, out of the 5 children that give her money, maybe 2 money from 2 persons, and then she starts a business. She starts that business, and that business will become taxable. But the money she's receiving from her kids are not taxable. Same thing if you send money to your siblings. If someone sends money to you as a gift, birthday gift, government is not taxing it because it's not considered as an economic activity.
Okay. Thank you very much. All right, thank you very much. Okay, my second question is that what if you are not in Nigeria, but you have a business in Nigeria, but you're not in Nigeria. Somebody is just maybe helping you to run it in Nigeria here. Is that business going to be taxable? The profits that come from it, is it going to be taxable?
It will depend if that business is a business registered as a business, being under CAC or a company. If it's a business, let's say Chimamanda Cakes, something like that, in Nigeria, because it has what the law says, economic ties in Nigeria, it's taxable. That profit from that business is taxable. If you were a company, however, and say Chimamanda Limited, it's a company in Nigeria, and the founders are not even in Nigeria, they're abroad, it's still taxable because, again, the business operates in Nigeria, right? The only instance that I can think of where the business will not be taxable in Nigeria is if the business is not operated in Nigeria at all. When I say not operated in Nigeria, the management is not in Nigeria. It has no interaction with Nigerian markets, with Nigerian resources, right? Say the business is in Ghana and the founder, the members are in Ghana, something like that will not be taxable. But if there's some way the government can connect, either the management is in Nigeria, the business is managed from Nigeria, is registered in Nigeria, the headquarters is in Nigeria, something like that, it will be taxable, really. Of course,
All right.
and then this is where the conversation around how to structure your business is important to reduce your tax liability. But if your business is not taxable in Nigeria, best believe that the country that business is being run in will also be taxable. So if you have 2 UK in the, and then what's this, and then a branch, subsidiary company.
Okay.
Okay. I think she's having a bit of hello everyone. She'll join us back. I think maybe a call came in or just a bit of network. She'll be back shortly and should answer your questions. Thank you.
Hi, I am terribly sorry about that. I kept getting a call and it was interrupting my network. I hope I was able to answer the last person's question.
Okay, yeah, but I still have
Your
one
line is
more.
breaking.
Can we hear me?
We can hear you now. It was breaking initially.
Yes, I was essentially just saying that the conversation is different if the business is in some, I would say, sensitive areas, the areas that or sectors the government considers sensitive or important. So things like oil and gas, energy, technology, for instance, education, there are certain incentives that they enjoy, especially if it's a startup. So if you're thinking to start something in the tech space, in energy, oil and gas, something like that, there's certain incentives and benefits that you enjoy. So it's broader than this, right? This is really just surface level. If you're thinking to have a subsidiary, a parent company, if you're thinking to operate from Nigeria or from abroad, there are more laws to really consider. There's the international aspect of things. There are treaties that the Nigerian government has signed with some other countries to ensure that your tax liability is reduced. So in situations where you pay 30% abroad, because of the treaty that exists between Nigeria and say the UK, for instance, your tax liability will be 10%. I don't think the US has a tax treaty with Nigeria, but things like this, and other countries as well. So the conversation is a bit more broader if you're thinking for business and all of that.
All right. Okay, my third and last question is, if for instance you are earning, let me say 750,000 per year, which according to the proposed tax law is not going to be taxable, right? But you were able to save that money in some kind of platform, and you got an interest. You got an interest that increased the money to like let me say 1 million. Is that extra that interest, is it going to be taxable?
You earn 750 and then you kept it in the bank, or you used it to buy something and then there's an increase. So your total income for the year is no longer 750, it's now 1 million.
Yeah,
Is that what you're
not
asking?
buying something per se, like not
Just
buying something
interest.
per se, like saving, just dropping, just keeping it somewhere, maybe in Piggyverse now that is, I heard is giving 28% per year or something. And by the end of the year, you're able to get up to 1 million naira. Add like 250,000 added to that your 750.
28% is on
So is that
savings, just savings, not investment.
no, not investment, just savings?
Yes, the interest there is taxable. So they start. So let's say it went from 750,000 to 1 million, right? The government starts taxing you from above 800,000. So 200,000 naira will now be at 15%. So you pay tax on the 200,000 naira extra. 15. Is it 15%? Yeah, 15%. So it's taxable.
All right. Thank you so much, Amanda.
Thank you. I think we have one more question.
Thank you. Yes, actually. Jane, can you please go ahead and ask your question?
Okay, hi, Amanda. Good evening. Thank you for the session. It's been so insightful. So I wanted to ask, as a new business, I recently started a new business as a renewable energy business, and my concern was that when I'm getting like probably supplies or maybe materials from client from okay, how do I explain this in please?
Sorry,
I'm
can
so sorry.
somebody
Please, can I?
mute their mic? They're they're unmuted.
Okay, so what I was saying. So, for example, when I want to
Yes, please
do a
go
service
ahead.
for a customer, and I have to purchase like components or materials, maybe like batteries, panels, inverters. So I have to pay VAT, and then when I have to do costing for the supplier, for the customer I want to install for, I still have to like charge them VAT. So my question is it not double taxation? Because if I had paid VAT when I purchased it, am I also supposed to collect VAT from the customer again? Then my second question, let me just quickly ask at the same time, is you
Sorry,
mentioned
please,
something
can you
about
come back with the
incentive.
first question? It was breaking. I couldn't hear you. Please say your first question
Okay,
again.
yeah. My question was, for example, if I want to render a service for a customer, because I recently said a startup in the renewable energy space, and I have to buy components for the customer to do his work or his service. And let's say I buy batteries, I buy inverters, I buy solar panels. I pay VAT to the supplier I purchased from. But if I also want to install for the customer, I also have to charge them VAT. Isn't it like double taxation? Can you hear me? Did you get me?
I don't know if it's me or if it's your network. I was breaking at a point. I think you stopped at you pay VAT to the supplier. I think that was the last thing I heard.
Yes. Yes, and I also charge the customer that I want to install for. I also charge them for VAT as well. So is it not like double taxation? Like, why would I be paying twice? Because when I collect for new, I also have to pay to government again, and I also have to pay to the supplier as well when I purchase. So that's what I was asking.
Okay, I think you have it confused. So before you can even collect VAT, right? You have to register for it. And the people that can register and collect VAT are large companies. As a small company, you are not mandated. I think that's the word I'm looking for. You're not mandated to register for VAT. And because you do register for VAT, you can't collect VAT. You can't also charge VAT, right? So what this will look like for you in this scenario is that for the supplier, when you collect the goods from the supplier, you are paying him VAT. When you take that same goods and you sell to the consumer, you're collecting VAT for them. This is, I'm assuming that you're a large company. You're collecting VAT from them. You can use that to claim VAT credits with the FIRS, right? That's the company. That's if you're a company. If you are a company, because that's the only way you can do that. So yes, you can now go and claim
Okay, thank you. So my second question. Okay, so my second question is you mentioned something about incentives for startups in energy space and something like that. Can you please run through those incentives, or is there a place I can go to research those type of incentives, please? Thank you.
So sorry again. My network went off for the 100th time. I don't know if you can hear me.
Yes, I can hear you.
Okay. So on your first question, I explained that my system doing like this. So damn, god damn. God fucking hell.
Sorry about that. So I got the first question. I wanted to ask a second question. I don't know if you heard the second question.
Yes, I wanted to clarify your first question. Sorry, we're all in Nigeria. Okay, so yes. So on your first question as to VAT, I explained that before you can even charge VAT, you have to be a large company. If you're a small company, you cannot register for VAT and collect VAT, right? Even though you pay VAT in some situations, but as an entity, you can't register and collect VAT for a small company. That's one. The second is that when you pay VAT, they call it output VAT. You're paying VAT. In your scenario, you're paying to the supplier. When you are now taking that same product that you've paid VAT on, or any other product really, and you're selling it, you're giving it to the end user, the consumer, and you're charging them VAT on it. That VAT you are collecting, because when you charge them VAT, remember they will pay to you. That VAT you are collecting, right? You're going to take both transactions and present it to the FIRS, which will now be the Nigeria Revenue Service, and say, this was the VAT that I was charged, this was the VAT that I paid, and this is the VAT that I collected. You're going to have to present those facts. When you use that, you will now be giving what is called VAT credits. I don't know if that makes any sense.
Yeah, yes,
so there's
it
also
does. Thank you.
Counterbalancing that comes into that. But so yes, so that's for the first question. The second question was on the incentives for the energy sector. It's actually a bit more extensive than this. I can't just run through. Like it has to like tie to what the business objective is. an example would be free zone areas. When I say energy sector, I'm talking oil and gas primarily, but I also think there's something for people that work in wind, solar energy, and things like that. But they could be giving holidays, right? So you are not liable to pay tax for 3 years, 5 years. Really depend on the sector of energy that you are operating in. You might be giving reduction on certain taxes and things like that. So it's not a list. It's not really a list of incentives that I can run through. For conversations like this, I think you'd have to consult with an expert to really look at your business and see the incentives that they can apply for.
Okay, thank you very much. I really appreciate it. Thank you.
Okay, I think that's the last of it. Do we have any more questions?
Okay, so shadow self. I'm sorry, I don't know who this person is. Please, you have 30 seconds. Just ask your question. Chimamanda, so sorry. One more person, and that's it.
No problem.
Shadow self. I don't know. Can you hear us? We can't hear anything again.
Because
Are
I
you
think his
here?
question here, he says, I'm assuming it's a he. Let's assume I earn. So the person says they sent a message on the group. Say, let's assume I earn over 100 million naira a year from freelance work. Under the new tax laws, what would you recommend I do to make sure I'm paying the right amount and not overpaying? Would I need to register a company, LLC? What do I need to do? And will the taxes go lower if I register an LLC? How do I reduce my tax liability? This question is actually very broad. It's almost like a consultation, but I'll tell you what you can do. So if you earn 100 million naira as a freelancer, that tax is a personal income tax. So the government already. Thank you so much. Okay, so the government already sees it as personal income tax and charges accordingly to the personal income tax rate schedule, right? Would I advise you to have an LLC? Again, I can't say yes or no because I have to look at other things in your businesses. What is the end goal of your business? Are you looking that you are primarily responsible for this, or you're looking that this is going to be an agency work, you're going to hire staff? Because again, I can't just say, oh, go and open an LLC, because there are other compliance requirements. There's not just tax considerations now.
Can anybody hear anything?
No, I think her network cut off.
Yeah, I think she has stripped off. I just wanted to confirm. She will join us shortly. So sorry, everyone. Okay, Victoria, I'm assuming you learn politics. If you are, you can talk, please. Your hand
Yeah,
is raised.
yeah, thank you very much. So while we are waiting for Chimamanda to come back, hi everyone, I'm Victoria, I'm founder of Learn Politics. I wanted to speak to Catherine's question, right? If you own a business, not even just owning a business, but where I work actually has a course on tax. We also have a book on tax. I'm going to drop my email address for you so that I can share resources and possibly courses that they are not doing a tax course now because they are currently reviewing the curriculum for the new tax laws for next year. So I can always drop my email so that you can just send me an email and I'll share resources for you. I'll share resources for you that you can actually learn taxes from, and possibly if the course is available, I'll also share with you, right? That's my email in the chat box. I also wanted to say, while we're waiting for Chimamanda, this workshop is done in partnership with Policy, and like Faith had introduced in the beginning, the Learn Politics in partnership with Policy is we organized this workshop because we thought that we need better understanding of the tax laws, especially as very young people, because next year implementation begins, and from January we definitely know that you have to be taxed. I think something also I wanted to say is, for those of us that work corporate jobs, the fact is that our jobs mostly pay our taxes, but filing of our taxes is majorly dependent on us. And the FY start that's the financial year for those of us in Lagos. I don't know if it's general, but it's by March. So you're expected to have filed your taxes for the previous year in March of next year, right? So by January, you should be gathering your pay slip so that you can use it as part of the evidences, like Chimamanda has said, right? In terms of declaring, so you're using your pay slip. And if you use the personal income tax calculator, you can say how much you start paying in taxes from next year as well. Chimamanda is not yet back, so I'll just be saying a few other things that pertains to Learn Politics, and maybe give the floor to Andrew if it's still here. Okay, still here to speak about policy to everyone here. So Learn Politics is an organization, and I also want to commend you guys for staying this long to learn about boring policy stuff. Well, Learn Politics is an organization that is democratizing, and how will I explain it? We are bridging the gap between political education and political participation, and we do this through courses, right? We do this through courses, we do this through content on our social media. We also do this through community workshops like this and community sessions. So I'm just going to, maybe before we end, drop some links to some of our resources and how you can actually be a part of what we are doing. One, we currently just launched our learning management system, and it has a course on it. The course is titled Understanding Politics. So if you have, if you think, oh, I don't know what politics is, we've done that in Learn Politics to break it down, to understand what politics is within 30 minutes. I'm very serious. Very sweet course, very nice course. You should check it out. I'll drop the link on the chat box, right? For those that have taken it, they will understand that it's actually very easy. We broke it down to the list form, right, for everyone to understand. And so we are also opening up, thank you for also joining this. You possibly get emails. We are also opening up our virtual community for people to join in, where we are going to foster political conversations, right, and just have fun while we are learning also and demystifying what is public fake news from what you get on the internet. We can also follow us on social media at Learn Politics NG across all social media: Facebook, Instagram, LinkedIn, Twitter as well. And the recap for this we'll also share the link with you this evening, but it's currently streaming on YouTube, so that you can always watch it if you do not remember anything. I think Chimamanda is back, so we'll give Chimamanda the floor to answer the rest of the questions. Then we'll give Andrew the floor to talk about policy. Thank you very much, everyone.
Terribly sorry again. I think this is the fourth time I'm apologizing on behalf of our country. So yes, to the second to the last question, I believe. So as to whether I would advise you to move from a small business from a personal business to an LLC just because you earn around 100 million. The answer is not clear-cut, because there are other things you'd have to look at beyond just tax consideration. You have to look at the business goal. What is the goal of the individual and the business? And it's moving from a personal organization, like just a personal establishment, to an LLC really the best thing? Are there other ways that you can actually reduce your tax liability without making that jump? Because making that jump comes with its own needs and its own obligations, and I might even say complications. A good one I was trying to explain earlier was that you will be required to file financial statements, and those financial statements can
Is it just me or network is kicked out? Amanda again.
Network has tripped.
Okay. So I guess am I audible? Good evening, everyone. Please, can someone talk to me if I'm
Good
audible?
evening. We can hear you. Yes, I can hear you. You're audible.
Great. So good evening, everyone. My name is Andrew Kinsum. I'm the founder of Policy. Policy is a non-profit that is dedicated to empowering youths to actively participate in policy and governance. Basically, we're doing all we can to get more youths interested and participating in all policy and governance conversation. A distinction or clarification I like to make is, and as we're seeing in this workshop, is that policy and governance affects everyone. It's not just even limited to a conversation on politics. Um, this new tax laws now is not clear cut politics. It's a policy issue, and these are conversations we need to be informed on, and even more than that, we need to actively participate. These policies affect us whether we like it or not. And I think um, in the past 10 years, we've been seeing more and more um, decisions by governments affect us more. So it's not enough that we even need to be informed. We need to be involved in the drafting. We need to do our own terms of advocacy. We need to give feedback as to what the shortfalls of this policy or tax or the laws are. I think from when the tax laws were signed, when they became laws, from views to laws, there was the uptick. A lot of people started talking about it, how it did not make a lot of sense, that. And it was really funny to me because the conversation regarding the tax laws, the one we're actually discussing, the one that people keep having questions about, did not start this year. It's been going on for a long time, like from when the committee was inaugurated, when they formed the committee, to when the bills were drafted, to when the House passed this before the president signed. So there were like different stages for concerned citizens to actually participate. There were open houses. I'm sure there were even feedback process that the committee wanted to take, and a lot of people did not take advantage of it and were not even aware of it. And now that's a law, you're in a lot of opposition to it. Not that those oppositions are not valid, but I think you agree with me that it would have been more efficient if we had those oppositions in earlier stages. And that's it's a recurrent let's say issue, yeah, in Nigeria. And it's something we, at least for youth, we're hoping to set, right? And a couple of you would have a position as to maybe the rate of tax, and some of those opposition could possibly be fueled by misinformation. Some of it are actually valid, but those are like concerns that would have done us a lot better if we had brought up earlier. But now it's not actually too late. It's very, very important if you think things about the tax laws that you do not agree with. Chairman has given clarification. The clarification, you get the right information, you still do not agree with. There's nothing stopping you from leading an advocacy charge, requesting that some parts of it to be amended. Obviously, it's going to be a bit harder, but it is what it is. So yeah, I said that just in relation to the current topic. I'm just putting light on the fact that like these conversations affect us all. And I think that's why people are here. We've had a couple of good number of people stay here for like an hour plus, nearly 2 hours now. And it's just you won't be here if you did not feel that this conversation was not important. And going forward, there's going to be other policy conversations, other law conversations that you should be participating in, right? I Even though the pace has been really slow, I think some policies would see is definitely in the coming years we'll see a policy that would regulate AI. Those are, I think, youth are the major users of AI in this country. That's a conversation that definitely we should be a part of. Policies regarding data policy is another one. Health, education, health fund and whatnot. Those are conversations that we should be informed on, know what's happening, and also participate. And policy is basically giving you the resources to do so, right? So we're having this webinar for this workshop in collaboration with Learn Politics. We also host other virtual events, so workshops like this, um, explainers. We publish explainers and blog articles on our blog, policy.ng. We hold physical events to empower people. And starting from next year, we'll also start doing training on areas that we have identified youth need training on, how we can better empower youth to actively participate. So yes, if this is something you are interested in, and you should actually go ahead and follow us on social media. You can follow us on Twitter and Instagram, and we get the lowdown. You can also check out what we have done. Some of the explainers we published. Amanda was actually not on that. We published an explainer article on tax laws, so you can use it more or less as like a refresher to this workshop to understand the tax laws in all its beauty and glory. Yeah, that's it for me. Chiamanda, at this point, which AISP are you using? And how many times have you sweat for that?
Sorry, say that again.
I was asking the ISP you're using and how many times you have cursed them out.
I have no idea what's going on. I think I want to say my village people, but not certain. Yeah, so sorry about that again. I want to believe I answered every question. If I am unable to answer your question, I don't know if you still have time to address it, or there's some arrangement with the organizers to do that differently. Is the moderator still on? I want to guide me on this.
Yes. I'm here. Okay, so I'll just give you about 1 minute to conclude on I think it's Shadow. I'm still struggling with his name. On his question about if you should do the LLC or something. Thank you.
Okay, so for Mr. Shadow Self, I was explaining fit all approach, and I also cannot just give the answer to say yes, move from that to a company, because it comes with its own consideration. It's stricter for companies as opposed to if you're just running it as a business name, right? So the other things you also need to consider, I also spoke about the objective of the business. What's the end goal? Are you looking that this will just be a freelance work, or you're looking to have an agency out of this? I think if the latter were the case, then we can have that conversation, and I can advise that you make it a company. But if this is not the case, I would advise that you continue as a business name and then look to reduce your tax liability. However, if you do decide to make a company, you have to consider other things. A key one being your financial statements that has to be filed by a chartered accountant. And some chartered accountants can charge as high as 1,000,000, 500, 400,000 for a financial statement. So there's a lot that you need to consider. So I think that answers your question. If you need like an in-depth consultation on this, you can always reach out to me. Then I think one other person, Ode, had asked a question. I couldn't read it before the network kicked me
Okay,
out.
Victoria had answered that. She was asking where she could take courses on task and all, but Victoria already gave her a response to that.
Yes. Okay. Thank you all so much for your time. I apologize for all
Alright.
of the technical
Um,
issues that we faced. Thank you for having me, paying attention, and thank you also to Learn Politics for the opportunity to just be here and to share all of the insights that we have.
yes, thank you so much, Chimamanda, for. I'm sorry, Michael. Sadly, we do not have the time to take further questions or anything. We are fast spent on our time.
Not a
Thank you so
question,
much,
just to
Chimamanda,
give me.
for.
I say it's not a